Okay, in this video we are reviewing some technical analysis. We're going to cover stop loss placement, trailing your stop loss as it moves up, and just general trade management. So when we're learning TA, we know that we want to look, the idea is let's look for getting into the next rally. So here I've actually brought the candlesticks back. I've reversed time, so we're actually only looking at around September 2017, despite it being November. So I'm looking to get in for the next rally. When do I buy? That's the points that we're looking for when we're trying to get into a new trade. So we see that this point right here is our all-time high. If we back this out a little bit, you can see this is kind of our all-time high. So right off the bat, I'm just going to place a line at our all-time high. I know that it may be a point of consideration. So we go to our all-time high, get rejected. We know this may be some sort of resistance. I try to come back up here and try to make it towards this line, and I get rejected again. So I might say at this point right here, okay, also around here is some sort of resistance. And it's actually kind of interesting if you think about that, because down here, when we went to this all-time high, we kind of caught support around here a few times, retested again, got rejected. So you can see that there's some sort of support right here. Oh, wait a minute, this minor support actually becomes resistance future on, right? We know that support can later become future resistance, and that's actually what we see on this point of contact right here. Now, we're not going to bias ourselves and say that this is also a point of contact. Why is that? Because this is the current price. The current price cannot act as a point of resistance. Why? Because again, it is the current price, and it is not in fact stalling there. It just happened to close around that price. So right off the bat, I'm going to draw those two lines. I'm looking to get in for another entry. We're going to go ahead. Let's look for some chart patterns, some setups here, maybe some wedges, things like that. If you don't know what wedges or chart patterns are, do a quick Google search. So I might draw a nice little line like that, point of contact, point of contact, point of contact. You can see every single time, we got rejected here, got rejected here, got rejected here. Wait a minute, we just broke above that line. So I would actually be considering entering on the close of this day right here, especially if we can close above this resistance line right here. Okay, what else can we see? We can also see that we can draw a trend line kind of like this. So we're actually forming some sort of wedge here. You might also draw another line right here, just a secondary line. Now the secondary line I just drew there really only has 2 points of contact, but that's fine. We can still draw it and have, we won't bias ourselves too much off this line, but I see a longer trend line right here. So automatically we see that we have a wedge chart pattern. We know wedge chart patterns can either break to the upside or break to the downside. So right now it looks like we are actually breaking to the upside. And let's go ahead, let's look at volume real quick. You can see just the other day we had massive accumulation right here, suggesting sentiment for this stock is to the upside right now. Another small note is that notice we had a low here, and then we had a higher low right there. So it shows that we're gaining some traction. Our low didn't follow any further than this past low right here. Let's also take a point to note here. So these two lines right here are the 200 SMA and EMA. Notice how it kind of caught support around there, and it also kind of caught support around there. We know that traditionally they act as dynamic support and resistance, and we're bouncing off of that and moving higher. So I would actually be considering an entry right here. So if I have a $10,000 account, maybe I consider a $1,000 entry. So let's just say I enter on this day right here. Now we know that we have to always determine our stop loss before we enter any trade. So let's think about this. And notice we are charting on the log scale right now. So where would I put my stop loss? Maybe, just a quick, points to keep in mind. Maybe I put it below yesterday's low. So yesterday's low would be right there. And let's measure that. We know that we want our stop losses to be anywhere from 3 to 5%. Really no more than that. So right now we have a 4.17% stop loss. I'll take that. I think we have decent risk management here. And I'm going to be looking to put my stop loss in this area right here. Since we're trading a wedge, I'm going to be looking to put it inside the wedge, right? because we know that this thing could come back down, test the wedge, and then bounce off. We know that stocks do tend to do that, so we know that we don't want to put it, you know, anywhere on here in the wedge. We know that we want to kind of put it below the midpoint, so to speak. What else could we do? We could also look at the weekly chart, and I could say, so this is this week, I could say, okay, I'm going to put it halfway in between last week's candle. So this was last week's candle right here. I'm just going to say, let's put it, I would measure this, put it in the very middle of the candle. Potentially, this is just, you know, some general logic that I might be using to get into this trade. So let's just say I get into that trade. Let's go ahead and back this chart up here a little bit. Let's say I get into this trade. And let's go ahead and hit the play button here. So this thing's progressing. Automatically, you might start to think, man, this thing's really moving against me. But that's why we have our stop loss. Our stop loss takes emotions out of the trade. And look, we said that this might retest the wedge right here. And look, matter of fact, it is retesting the wedge. So at this point right here, I would be looking for a bounce. Let's also note that we're falling on pretty low volume here. Until this day right here, we didn't have much volume. So we're falling on low volume, which, you know, I'm glad that we're not seeing massive volume on our selling there. That's a good thing, if anything. Hit play again. Look, we're bouncing. There we go. That's a good candle. So once we break back above the support, if I'm really aggressive on this trade and I'm really sure in this company, I've done some fundamental analysis, maybe I add to my position here small. You know, if I have $1,000 here, maybe I add to my position, you know, maybe $200, $300. Personally, I probably wouldn't. Maybe I would add once it broke this top right here. Maybe I would add once it broke the top of this wick right here. See that? Maybe. And I'm glad that we didn't just see rejection at that top line. Let's continue hit play. Okay, see how it went up to this line and it kind of, it's now bouncing below it. But notice we're seeing some Doji candles. If you don't know what Doji candles are, go ahead and Google it. We know that the Doji candles can signal a turning point for us. So maybe around here I might take some gains. Maybe not. Who knows? It's a, you know, managing the trade is the hardest part. So you have to be, you know, your own trader here and determine, do I want to take some gains here? What are you up right now? Let's see. Right now you'd be up roughly 5%. You'd probably be looking for a bigger move than 5%. Let's go ahead and continue hit play. Man, that's a bad candle. We're seeing some Doji that could be a turning point. We're going back up, going back up. Massive breakout. On this massive breakout right here, and look how much volume steps in on this massive breakout. So I know that this has confirmation behind it. The buyers really have control through here. I definitely, if I still had a position, I definitely would have added to my position in here. Definitely. I would have probably, you know, if I had, let's say I still had $1,000 even on this pullback, I probably would have, you know, added, you know, a decent amount of money, maybe, you know, $500 to $800, maybe doubled up, probably not. And you kind of see it kind of caught support around this old support and resistance line, and we know that support and resistance isn't an exact level, but rather an area. So I'm going to keep playing the chart out here. Let's see what it does. Boom, boom, boom. It just keeps going here. News probably happened there. Moving higher, moving higher. And notice I haven't been talking about my stop loss at all, but I will say, if we were to back it up to this point right here, I probably would have moved my, you know, I'm up 5%, I probably would have moved my stop loss up a little bit closer to break even. Once we broke above this level right here, I definitely would have had my stop loss at break even. You know, it's all about getting that stop loss up to break even. We have to be careful not to do it too soon. Why is that? Because things can retrace. Just like it retraced here, if I had put my stop loss at break even, I would have just barely gotten stopped out. So we got to be careful not to do it too soon, but the quicker that we can get it to break even while having relative certainty that we're not going to get stopped out on it, the better. It's all about getting to that break even point. And once we're above this line right here, I probably would have moved it up up into this area right here. I would not have put it right here. Why? Because I know this is a support and resistance area, and I know that we could retest the support and resistance, and bam, right here we did retest the support and resistance. So if I'd put it right here, I could have risked getting stopped out, so I would put it a little bit below. So, you know, when we're up here, I would have put it right there. You know, up here, I might even, you know, what am I up right now? Like, let's look, because it's all about taking gains. The money's not yours until you take a gain. So right now we're up 20%, and my stop loss is only locking in how much for me? A measly 7. So, you know, I'm up 20% right now. I might look to really trail this stop pretty tight. You know, maybe I only think it could have ran, maybe back here I thought it could only run 20%. So maybe I would trail a stop loss at like a 2% stop loss. You know, here was our previous high at, you know, we're right here. Our previous high was right here. So maybe I put it right below that previous high in case we retest it. And then let's continue to play this out. I guess that is, oh, no. So that's how that played out, you know, and since I'm up so large, I really would trail this pretty tight, you know. Let your gains run. I probably wouldn't sell, but I would trail it very tight. Why would I trail it very tight? It's because I want to let my gains run. However, I want to lock in my gains when I'm up 20, 30%, you know, something like that. So you don't need to have a 10% stop loss when you're up 30%. It's like one of those things where it's like, let's let them run. So I'm not going to sell. I'm going to use a stop loss to take me out so that I'm letting them run, but I'm going to trail it pretty tight. And you can use a trailing stop loss to do that. I personally have never, but this is a way that you might manage your trade in that manner. Now, this isn't the best example to do a measured move on, but I'm going to go ahead and I'm going to attempt it. So we see that we have some sort of wedge occurring here. If I was a very systematic trader and I wanted to do a measured move, I might measure from here to here, say, okay, that's 12%. I'm going to pivot it from there, and I'm going to put it, so that's around 12% is at 36.68, and I would say, okay, if I can get around 36 something, I'm gonna take some gains off the table right here, and it would not have been a bad move. Let's say you took some gains off the table once you hit this price point right here. Even if you only reduce your position by 50%, you could have then added on this massive, you know, whatever news. Well, I guess earnings came out here. You could have added on this dip if you really wanted to. Would have been a little riskier because it is on earnings, but I would have taken some gains off the table, and I just locked in. At least I locked in 15% gain in 31 days worth of trading, or 43 days of, you know, just life. So that's how I would manage this trade. I hope this video helped. Like, comment, subscribe. Let me know your thoughts.